Hi everyone, welcome to the pre-Thanksgiving midweek market update. I'm Ashley Rosser of Victory Fiduciary, and today what we're going to get into is the fact that for our pre-Thanksgiving time so far, it certainly looks like it's going to be a bullish Thanksgiving. And so kind of continuing on with the trend that we've been seeing for the past few weeks is that markets continue to kind of be dragged higher and higher. And so we're going to talk about some of the things that we should be kind of looking at certainly over the next few days and weeks. But certainly we've continued that overall positive trend within the market. And so that has really helped the Dow to achieve the milestone that you may have heard about yesterday, that the Dow broke 30,000 for the first time ever. So definitely something that is a big deal in general when we look at some of the sectors that the Dow represents. We have pulled back from that today. We're down about 200 points from our high of yesterday, which isn't really super unexpected. A lot of times, once we're really close to kind of hitting a major milestone, there's kind of like almost like a bullish pull to kind of get through that, and then sometimes we'll see a pullback the next day, so not expecting. So what was going on though with the Dow? So this is something that I think is important because we've heard a lot about the Dow over the past few weeks, that it's really been climbing, and it's really been in response to positive vaccine news. So it's kind of been like Groundhog Monday for the last 3 weeks. Every single Monday we've kind of come in and found out that there was some positive news regarding vaccine or therapeutics. So literally 3 weeks in a row we've seen this, where different vaccine manufacturers have come out with talking about the different efficiency and efficacy of different vaccines, and then talking about how we could get these distributed. And so the big move that we saw this week was that we began to hear news that it was possible that we could begin vaccinating people as early as December. And so obviously that's going to have positive moves for areas of the market that have really been waiting for this type of news. And so within the Dow, we see some pretty significant components in areas like Boeing, in Disney, American Express, because again, we're expecting to maybe see increased consumer spending. And so these areas that kind of have been lagging for a while, when they get news that we're closer to getting back to normal, obviously there's going to be a big pull into those areas. And so we've kind of seen that almost every week for the past few weeks. So yes, we did hit 30,000 on the Dow yesterday. Likely it was in response to a lot of this positive news. And so now it's just going to kind of have to be interesting to see, can we really start rolling out these vaccinations as early as year end? And then, how long will it take for us to get some level of herd immunity from that? So, but again, it's been an exciting week on that front. So let's get into some things that I think is important just to make sure that we're kind of aware of as investors. And so this is the S&P 500, and I think it's really important to note. So remember, here's our lines of support here and here. And so you can see these were our drawdowns in September and October. Then we've had a nice run really since the beginning of November. It was really accentuated by these vaccine announcements, because obviously the market really wants us to be able to kind of go back to normal as quick as possible. So you can see here, it's been really interesting movement. So you can see multiple days where we opened up really high and then sold off a lot. And you can see that happen, and we're kind of been hanging in the same trading area here for the past few trading days. And so I just think that as investors, it's time for us to just make sure that we're at least paying attention, that we understand what we're seeing here. We are extremely extended and deviated still from our long-term moving averages. And remember, at some point there will be some sort of reversion to bring us back closer to these long-term averages. That's the way averages work. You can only trade above them so far. I mean, we are significantly extended from these areas. And so what's going to cause this mean reversion to happen? Nobody really knows. That's the whole point. It kind of catches us off guard. But the last time we were this extended was actually back in February, and then obviously we know that catalyst, and we saw a significant correction, was learning about the virus and the fact that we were going to likely have to have shutdowns. I'm not saying that we're going to have a 30% correction. That's not at all what I'm saying. I'm not saying that we shouldn't have equity exposure at this point, because all of our all of our technical indicators are positive. I'm just saying that we should be paying attention, really making sure that we're aware of where we're invested, making sure that our allocations are not significantly overbought at this point, and just really paying attention, because if what you have isn't working now, that may be that you probably want to consider maybe cutting off any losers that you have, because if it's not working now, it's probably not going to work. So again, really pay attention here. Again, when we can run extended for a period of time. We've been running extended from fundamentals. Again, we just saw another, significant unemployment claims from last week went up again, over 700,000. And so we're still kind of seeing this trend of the fact that the damage has kind of been done to the economy, and still kind of unpacking that as we're heading into winter season where COVID cases are really accelerating. And so I'm hoping, that the market's going to be able to sustain itself with what we've done so far, but just realizing that we're seeing additional weakness in areas of like retail sales and sentiment and things. So just really pay attention here. Definitely, if you're doing your own investing right now, really make sure you know what areas you have exposure to. If you were uncomfortable in September and October when we saw these corrections, which were quite expected based upon how deviated we had become, then you may have too much risk in your portfolio. One other thing I just want to point out here, we just triggered a money flow sell signal again. That just happened within the last few days. And I just want to show you how this has happened in the past. So in September, we triggered that sell signal. We see what happens. Here we implemented that sell signal. Okay, and this just has to do with money inflows and outflows of the market. We did just trigger another one. So doesn't necessarily mean that we're going to have a huge 10% correction. We can trade sideways for a couple of weeks and kind of not do a whole lot and work some of that off. So that is possible. I'm just letting you know that there is the chance here of us seeing, 3, 5, 9% correction would not be out of the realm of normalcy with where we are right now. So kind of pay attention to that. Those are things that we're watching. If I was going to be taking positions, I would make sure that they were not completely overbought, that I understood where their relative strength was. You want to make sure they have positive momentum. So those are the types of things that we look at. So we've not made any changes to our portfolios for right now. We're keeping our equity exposure the same. The models are doing very well. So relative strength and positive momentum is giving us that exposure that we are looking for. And again, we're just really paying attention here to see what's going to happen in the next few weeks. One other thing that I do want to make mention of is that it's very possible that we'll see increased volatility coming into early December. I'm going to talk more about this next week. Just going to kind of plant the seed now. So mutual funds have to distribute. They have some mandatory distributions that will need to be made prior to the end of the year. And right now, mutual funds are holding on to the lowest amount of cash on record. And so they're going to have to they're going to have to sell to be able to provide those distributions, which could absolutely trip the market up, at least short term. So as those repositionings happen, that's something to keep an eye on. We're going to talk a little more about that early on in December, but considering where we are now with being so far deviated with what's happening. So typically though, what we see with that, we see sloppiness in the beginning of December, and then hopefully then we can see a Santa Claus rally by the end of the year. So those are just the things I wanted to get into there. So we look at fear and greed in the market and investors because it actually can be sort of like foretelling about the market. And just right now, I said last week we were at extreme greed levels. We're still there now. We are kind of like off the charts with greed, basically meaning that investors right now think that the market can only go up. They think that there's absolutely no risk in the market right now. And typically when we get to that point, that's when we see a reversion. Maybe not. Maybe this time we're just going to trade sideways. But again, just something to think about, that if you'd kind of been sitting out on the sidelines like right now, then maybe you just kind of hold tight for a couple more days, because it's likely that there may be a better opportunity, a better buying opportunity short term coming. But again, thought it was interesting. We are at super high levels with greed. And finally, we just really want to wish you and your family a happy Thanksgiving. We know 2020 has been a year full of just challenges and kind of the unexpected. And so here at Victory, we really do want to wish you and your family the very best, blessed Thanksgiving. And for all of our clients who I know tune in and watch this often, we do truly cherish our relationship with you. We are so thankful for you. You are the reason we exist. And we know that there's been a lot of just a lot of things that have happened that maybe were unexpected, but we do thank you for being with us, and we're looking forward to having another wonderful year with you. So again, you and your family, happy Thanksgiving, stay safe, and we'll see you next week.